Hi, I'm David with Low Cost Mortgage with your weekly rate update for realtors and industry professionals. Today is August 3rd. Everybody has been noticing that the interest rates are going up. Well, that's kind of been the trend lately, partly because, not exactly directly, partly because of the Fed raising interest rates by 1/4%, 25 basis points last week. That's indirect, but it does have an effect. What really has an effect is the 10-year Treasury. If you take a look over my left shoulder, you'll see that chart there. That's the 10-year Treasury. When rates go up in the 10-year Treasury, like you see right at the end, there's a big spike. That draws investors away from mortgage-backed securities and they go into 10-year Treasuries. It's a little more stable since most people are invested in homes for an average of 5 to 7 years. 10-year Treasury, of course, is 10 years, so the return there is better than mortgage-backed securities. So that's why you see the interest rates go up for mortgages. The other thing is that the jobs report came out. There are more jobs than they were expecting, more job openings, and of course fewer layoffs than they were expecting. And so that goes against what the Fed is trying to do, and that hurts mortgage rates. So the next big question, since interest rates are up, is what can we do as a lender to help mitigate those high interest rates? Well, the first thing is, as a lender, we, during a pre-qualification, we get all of the docs from a borrower up front. So we know what an underwriter is going to need so that we're able to, when you go under contract, we're able to get those documents in and everything in registered and locked as soon as possible. As volatile as everything is right now with interest rates, we want to lock right now. But the second thing is, what if a lender partner that we place the loan at, if their interest rates go down? Well, we work with lenders that can float that rate down. So after you get out of initial underwriting, or even better at clear to close, if interest rates go down, we follow that down. But it's capped. It can't go up from what the interest rate is locked at. But there are other things that we can do. We can work with the agent, ask them to negotiate with a seller for seller concessions. So our closing costs are around $6,000 to $7,000. So if you've got $6,000 to $7,000 in the bank to pay for that, but you get, say, another $4,000 to $5,000 back in seller concession, well, you can use that money to help buy that interest rate down. That's another great way to help get that interest rate down. So if you have questions, give us a call, 303-503-5799. That's my cell number. Or you can email me at david@lcmloans. Happy to help with any questions that you've got and to get your borrowers pre-approved and ready to go. Thanks a bunch.